Hi, my name is Thomas Pierce. I'm with the Kentucky Center for Agriculture and Rural Development. We are a cooperative development center in Kentucky, and I'm here with Mark Wischmeier from Blue and Company. And today we're talking about general accounting questions when it comes to cooperatives. So first, Mark, if you could just introduce yourself and tell us how your work relates to cooperatives.
Okay. Mark Wischmeier, Blue and Company. I've worked for Blue for 20 years now. I'm a CPA. I've done a variety of different clients and industries over the years, but pretty much for the last 15 years, my focus has been very heavily agribusiness with strong group within that being ag cooperatives.
Great. So one thing that I know is really important is when groups are forming to really consider the accounting implications when they're forming a new entity. So what should groups forming a cooperative be keeping in mind from an accounting perspective as they form a new entity?
One of the key things they want to keep track of is the membership itself. You know, who's buying in, keeping track of the stock, and then maintaining that member list through time so that as you go through the years and you allocate earnings, typically patronage refunds that go back to the members are in some form of either cash or equity. So you need to track that equity balance over time so that it can be eventually redeemed to the members either upon a scheduled payback progression, or if something were to happen to the member, if they were to pass away, distributing it to the estate and next of kin, all those different things. So you always want to make sure that when you get yourself set up that you are tracking what transactions, whether you're purchasing or selling from your members, and then how to relate that income back to the members and track what is owed to them over time.
Gotcha. So with that, who in a co-op oversees the accounting system? Who's the team in charge of that? What qualifications do they have? How do they determine? How does the co-op determine when outside help is needed?
It varies a lot based on the co-op. I mean, because you have very, very large ones. I mean, we deal with some that are over $1 billion. We have others that are, under 50,000 in sales. It just kind of varies. If you're large enough to support the structure, hopefully there's going to be a few people in it to help segregate the duties. You're going to have people kind of deal on the accounts payable or accounts receivable side of things, kind of tracking those systems. And then you would have a controller or even a CFO that's overseeing the entire project, making sure that everything is properly reconciled and done monthly, and then with the closeouts, and then that your year end is put together and that everything is functioning as it should.
Right. So just zooming out, what are some common misconceptions of accounting as it relates to cooperatives you've seen?
I think it probably just falls under more of accounting in general than misconceptions with it. I mean, it is a vital component to any business or industry. Specifically when you're talking about a co-op, though, I mean, you've got management and then you've got a board. And the board is, responsible for overseeing and evaluating management. If you don't get proper accounting information, to track your results, where management can make decisions and then the board can see said results and properly evaluate how they feel management is doing, it's just really hard to be very effective, because the better people may make mistakes from time to time, but the better information they have, the higher likelihood they're going to make good decisions. If you don't have good and timely information, then you're setting yourself up to make bad decisions, which is ultimately going to lead to failure.
Gotcha. So kind of the flip side of that, how important is it for the board members of a co-op to understand the financial side, like reading financial reports, understanding bookkeeping functions? How important is that to the success of the co-op?
From a high level financial understanding, I think it's very important. Do they have to be fully educated in accounting and being able to fully read through a financial report. I don't know if they necessarily have to have that. I mean, that's, typically those things are going to be presented by your controller or a CFO in a board meeting. So the key things that they might need assistance understanding, that person should be able to explain it to the board and help them out. But they need to understand different key components that you want to look at, different margin analysis, if we're multiple locations, is, understanding why one branch may be functioning better than another. And then the other key thing that a board member's got to do is they have to remember that when you're in that board meeting as a board member, you're a board member. You're a member of the co-op, but you're a board member at that time making decisions for the betterment of the co-op. And sometimes we see that is a struggle to where that farmer hat, the board member hat, it's kind of hard to take one off and put the other on, because when they're making decisions in a board meeting, there's always that thought in the back of their head. It's like, okay, well, how is this impacting me myself? And do I really want to do that? Because we might be looking at something that might make things more expensive for me, but it's needed to keep the co-op going and functioning at the level that it needs. And sometimes they struggle with those decisions. But that too is going to relate to their financial understanding, and can they look at the bigger scope of, I'm here weighing in on the co-op itself and not just me.
Right. So just zooming out again, what would be some examples of best practices for co-ops in accounting?
Having segregation of duties, I think, is key. Having timelines at the end of every month for when certain things will be completed and done from a month-end wrap-up, making sure proper cutoff on everything. Those would be the initial steps that you would want to do. I would have certain reports that are reviewed or available to be reviewed by the board at each board meeting. Accounts receivable is typically always one of the biggest risks that you have within a co-op, making sure that you're going to get paid for what you've done. So reviewing that accounts receivable aging, making sure everybody is current on what is owed. And if anybody falls out of being current, that proper discussions are being had and decisions are being made to make sure that is received. There's, especially in some smaller cooperatives, maybe they don't quite have all the internal controls that you would need. I think it's important that there's, whether it be the full board or just some component of a board, call it an audit committee or what have you, is doing some specific review over some things to make sure, there's an extra set of eyes and making sure that everything is in compliance, that we, aren't missing anything, that we aren't giving too much control to a single individual.
Right. Well, those are the questions that I had for just general accounting and cooperatives. Is there anything you'd like to add in terms of maybe pitfalls to avoid or success stories that could just add to this discussion?
Well, things to just be aware of, in today's world and economy, there's a lot of people that are just out shopping for the best deal. So it's important that cooperatives advertise or go to potential new members and fully explain the benefits of being a part of a cooperative. There is the passenger refund. While it may not come immediately, there's a lot of different plans on how things are returned to people over time. But there is that benefit. It may not be right away on the front end, because I can go pull up the internet on my phone and I can see prices at different places and I just want the cheapest price. Well, there could be some long-term benefits of having that equity, and what is eventually paid back will get you a better deal with co-op if you're purchasing from them, or there may be additional selling power if you're just supplying the co-op for the sales side of it. There may be additional markets that you can reach by being a part of that bigger component than what you can do by yourself. So I think those things are big to do. With some of our larger co-ops, some risks that we have seen is A few of them get a little carried away with the expansion side of things and want to add additional locations. And their thought is, well, we'll just build something new and then we'll go price ourselves in the market to whatever we need to do to get customers, and then eventually it'll all work out. And that's a really, really expensive thing to do. You need to have really high profit levels to just sit there and purposely have losses for some period of time to gain market share in a new area. So that's been one of the biggest risks I've seen with the co-ops that we have.
Yeah, so really thinking long term and not just about, immediate impact seems really important. All right, well, Mark, I really appreciate your time. I hope you have gained from this video, and for more info, you can go to KCARD.info, Kentucky Center for Agriculture and Rural Development. We are a cooperative development center in Kentucky, and we have more resources on starting cooperatives, as well as other business development and other services that we offer. So thank you very much.